Hello, welcome to the Wealthy Trades Daily Market Forecast for June 16th, 2015. Let's get started right away. We had another down day yesterday. So the question that needs to be running through people's minds is, are we doing any major technical damage? And the answer is not quite yet, okay? Now, let me explain this. Remember, I've been talking about this. You watch the videos in the Resource Center, and it's very, very important. You watch these videos in the Resource Center every day under podcast. All right, subscribers can watch these before the market opens, so you can have a plan for the day, which is very, very important, the day, week, or month. Okay, so but let's talk about what we're doing, and if we're doing any type of technical damage, and if what we've got to potentially pay attention to in the markets, different levels we need to pay attention to, etc. So let's go over this. Remember, the one thing that we pay attention to when the market shifts into a different direction, all right, from an uptrend to a downtrend, or a downtrend to an uptrend, uptrend to a downtrend. All right, remember, green bars represent uptrend, purple bars represent downtrend. Very simple. The one thing we pay attention to, you've heard me say this before, is the shift area, okay? So this is the shift bar. This bar is actually pretty important, but what's actually really important is this shift bar and the pivot low it broke to go into that downtrend. And technically, on this one, the pivot low it broke to go into that downtrend was 212.51. 212.51. The reason why this shifted in to a downtrend and went green, or I'm sorry, went purple, is because it closed below 212.51 or 212.50 essentially. So it turned purple. Then price rallies. What happens a lot of times is it shifts, rallies back up, and tries to test it. Or it shifts into an uptrend, sells off, back down to that shift area, tries to test it. That's exactly what happened here. We rally back up right into that shift area, and then we sell off again. And then now here's what's happening. Now the market goes into kind of ebbs and flows, typical ebbs and flows. But it puts in new pivots that we need to pay attention to. And the pivots that we need to pay attention to right now are fairly obvious, all right? On the upside, we got 212.09. On the downside, we got 207.69. Now, those are the key areas. What the bears want to do is they want to confirm this move, because they really haven't been able to get any type of steam to the downside. The bears haven't. So what they would love to do is break this market below 207.69. If they can do that, then, all right, then I'm a little concerned. Here's the reason why I'm a little concerned. We do have a little bit of a technical head and shoulders here. All right, this head and shoulders, I've measured this out, will put us down to about 200. Okay, so that's not a huge sell-off. So why would I be concerned? Well, here's kind of what I'm thinking. If we break 207.69, okay, and we close below 207.69 on a daily basis, it confirms this head and shoulders pattern. It also confirms that the bears are in control, as we know, and they're breaking below those pivots. My target on that move, the initial target, just a measured move, is down to 200 in the S&P 500, or the S&P 500 ETF. Now, here's the biggest concern with that. If we do close below that 207, that pivot, 207.69, and everything that I just said happens, right? We then move down to 200. We need to watch out, and this is probably the most important thing for the bulls. We cannot close below 204.12 on a weekly basis. If we do, then what's going to happen is we're going to shift into a weekly downtrend, which is not going to be good for the bulls. So that is my concern. I'm not saying it's going to happen. The bears are going to try everything they possibly can to break 207.69. And the bulls are going to try to defend that. And what the bulls want is they want to try to rally this thing up and break 212.09 and close it above that. So there's going to be a major battle over the next couple days, and I think this 212.09 level on the upside, if that breaks, bulls on parade, rally, rally, rally. If we break 207.69, we could see a decent sell-off from that level over an extended period of time. So that is what I'm watching out for. What are we doing for today? Before I go into today, you know what we're doing for the month. We're still long in the XLV. That's what we've been in all month long, okay? And it just like the overall market, it's not performing great, but you know what? We're in the best sector, and that's what we're going to be in all month long. We still got time. For the week, all right, we have a trend quality that's below 50%, so we did a pairs trade. Our pairs trade is long XLF, short XLE, or if you're in stocks, it's long AIV and short DO. That is our weekly trade, pairs trade. Our weekly trades, as I mentioned yesterday, have been just absolutely destroying it. They're up since the beginning of March, up like 6.3%. That's huge outperformance compared to the market. Now, what are we going to do today? All right, so today we are looking to short, and we're going to go blindly short because the quality is above 50%. So the XLP, the consumer staple sector, represents the best sector to short in. So let's move all these stocks over into our portfolio, and then let's find the best shorting opportunity for today that we can go into. So I'm going to do this. I'm going to move all those over, and we're going to find the best short. As you know, I use my same pair down technique. Look for levels to win profit. I eliminate anything that doesn't have a levels to win profit on both sides. So if something doesn't have a levels to win profit on both sides, it's gone. As you can see, all of these but K, and this is what I mean by something that doesn't have a levels to win profit. So K doesn't have a levels to win profit, gone. Okay, so all these other ones make money. The next technique I use is the levels on levels, okay? So levels on levels spread. I want to see the widest spread that I can find. So 30 and 15 is better than 21 and 17. It's better than 25 and 7. Well, close. Close. In fact, very, very close. 25 and 7. We've got just to make sure. It's too early for me to do quick math in my head. That's 17.3, right? Well, how does that compare over here? Well, we've got 30 and 15.4. That's all. So PEP actually is better. So PEP is better because it's 17.3% spread compared to the other one. So, but look at this one. This one's even better. This one's like 19% spread. How do I know that? Well, 32.7 minus 13.5. We got a 19% spread, so KMB is better than that one. 32 and 11. Okay, so 32 and 11. HRL is better. HRL is still better than that one. 30 and 13 isn't as good as 32 and 7, or 32 and 11, I mean. And it's not as good as that one. So HRL is the play for today. What I'm going to do is I'm going to go short at the open. I'm going to close at the end of the day. There's also two good shorting opportunities. If it hits 50, or two others. If it hits 55.92, that's a good area to short. It typically closes below that, and it makes money shorting there. Also, if it rallies up, hits 56.68, that's a good shorting opportunity because it typically bounces off and closes lower. I know that because of the stats here and the levels to win profit. This is a good trade. HRL is my short at the open, close at the end of the day. Let's continue to outperform. Our weekly trades are doing great. We're long in AIV, short DO, and our monthly trades were along the XLV. Let me know if you have any questions. Stay in front of the markets. WealthyTrades.com helps you stay in front of the markets, be in the best sectors, outperform the market. Email me, info@WealthyTrades.com if you have any questions. Thank you. Make it a great day.